All right, welcome to another episode from the Chart Reader. So I almost did not make a video. My wife pushed me enough to do it. So we're going to do a quick one on the major indices. I actually put a post yesterday, so it'll kind of echo off that one, all right? But I want to look at the S&P 500, I want to look at the NASDAQ, and I want to look at the Dow Jones. I'm probably going to look at the ETFs, like we're looking at the SPY right now because I have way more lines on the other ones. I might even delete the lines and just kind of look at that, all right? But I'm going to give you my thoughts and you can see it on the screen. We're actually going to look at the weekly chart and the monthly chart a little bit more than the daily chart. We'll still look at the daily like we usually do, but I kind of want to take more of a zoomed out view than the chart reader usual, for lack of words, right? So real quick, if you've never been here before, what are we going to do? We're going to use 5 moving averages. We're going to use these lines, but like I said, I might delete them. But generally, I will draw some horizontal support and resistance lines. And then once we use the information up here, we'll use our lower indicators of the MACD, RSI, and volume. All right. Real quick, if you can please share this video, if you can please subscribe. I think I switched subscribe and share. But yes, anything you do helps so much with these YouTube algorithms, all right? So I've made the decision as I was saying all that stuff. So we're going to come to the S&P 500. I'm actually going to delete all my lines. I'll probably draw some fresh ones, more than likely later, and then we'll see them later. Let's take a look at a clean SP 500 chart, all right? We're looking at the weekly. You know what? Let's talk about the daily first because I sent this image actually. So looky what happened. So one thing I think I said was yeah, it was 53 I forgot. Whatever. What I know I wanted to say, and hopefully I did, was look, the SP 500 had a beautiful recovery yesterday, all right? And obviously that was echoed across all the other ones. But what was going to happen with the 100 moving average was really going to be the big question, all right? And my goal was to bring us over it, and not just bring us over it sometime during the day. It was actually to close over it. And man, what a crazy, we open all the way up here. You can see it's the second line right there. We open at $5,293, just a hair away from that 100 moving average, and actually cracked over it during the day, right? But then lo and behold, what I hate is today closed well below yesterday, right? Yesterday closes right here, opens right here. We end today under both. We completely ate yesterday, and oh, that is not good. I'm here generally saying at least maintain 50%. We completely took away yesterday, and hey, some might argue, oh, excuse me, hiccup. Some might argue, like this was down here, we gapped up, blah blah blah. No, I'm talking day to day. That's not. I don't like when today completely overshadows and completely takes away from yesterday. All right, that's just something I don't like. All right, and when I look at NASDAQ, let's look at COMPQ, you see the exact same thing. We closed here, we opened here, we're down here today. And look, we're basically where it closed yesterday. I'm not trying to look at the exact numbers, but I don't like that, right? One more time, DJ30, Dow Jones Industrial. This one didn't take the whole thing, but definitely took well more than half, which would have been right here, right? So I think yesterday's bounce definitely did not confirm today across the three, all right? When I look at the I think it was, no, it was NASDAQ. It was QQQ. No, was it SPY? Sorry. Nope, it wasn't SPY. All right, I'm thinking last guess. Let's just look at NASDAQ really quickly. It was this one. So on today's NASDAQ candle, we actually get some death crosses, right? You want golden crosses up. The 20 went under the 50, that's a death. And then the 8 went under the 100, that's a death. These two are not good, all right? All that said, what I want to focus on is a little bit zoomed out, right? That's what I was planning on doing, and then lo and behold, we talk daily way too much, right? But let's take a look at the weekly S&P 500 and let's just zoom out. All right, let's just zoom out. Dude, goodness. Okay, my goodness. How much more do I see? Okay, so The S&P 500 started before 1996. If I go to the monthly, yeah, you can see how far off it is. So the weekly ending right here, these are inaccurate lines. The lines obviously extend, right? So um, I'm going to look at it right here. So from, what is this, 2004? From 2004 all the way to 2024, for the last 20 years, we've only been on the weekly chart, we've only been under the 200 for this moment here and this little brief weekly moment here. You can basically say once, right? There was a little test here, never again. Okay, that's the first thing I'm seeing. As I zoom in just a little bit more, yeah, let's come into this. Since this bounce right here, since a 2011, that's a long time ago, right? Since 2011, we've on the weekly hit the 200. I don't even think we hit it there. No, I see black in between those, right? Like we did not hit it there. Even that's just a wick. I would say we've hit it once, and this is the time that we went below it. We hit it twice, and that's it. All right? Us going this low is actually a very, very rare anomaly. All right? The other thing that I see, again, in this view, right? We basically started looking here. This 50 moving average line is really strong, and actually so is the 20. In this view, I think if I go right here, all right, let's say it from right here. Since 20, right here, yeah, sorry about that. Since basically 2012, 2013, you can almost always see that we're over this orange line, all right? And then one more time, you can also see we're almost over. We're actually almost never even touching. We're almost significantly over this 50 moving average, right? The one thing that does kind of bother me is the 50 moving average isn't the strongest of lines, all right? And what am I saying? Look, we bounce here a little bit, but as we start getting into like later on, we very quickly lose the 50 right there. Again, there's a little bit of a hit, but if I zoom in, give me a sec, let's just keep zooming in. Right? We're not actually, there's no candles touching it right there, right? When we get to the 50, we lose it. When we get to the 50, we lose it. When we get to the 50, it holds a little bit better than these other moments, but it does lose pretty quickly. That one was a decent bounce. I'm a little at the moment, my S&P 500 low is 49, basically flat, 4,900 flat, all right? For the SPY, that's going to translate to basically the exact same thing. I didn't delete the lines. Let's just, yeah, it's basically this, 498. That's a decent number. That's close enough, and I don't have to delete those lines, SPX. If I was to take a guess, I would say that is our number. All right, remember that number, 4913, basically 4,900. When I come to the monthly, obviously we're seeing a lot more information. Right now we're going into the 19 somethings, right? But two things are let's just keep this view. Why not? Let's just keep this view. Number one, we barely ever get like this to the 200, right? I've seen people talking about under 3,000 on the S&P 500. Get out of here. All right, I think that is an absurd comment. All right, I think that 50 is probably the lowest that we should be thinking. And hey, this one is actually saying 42.92, right? 42.92. What was this one saying? 49. So now I come down here, now I come down here, now I come down here. Oh man, that 42 is actually under all these. So now I think to myself, all right, how likely is it that we come all the way here? Well, look, we still have this orange one in the middle. And just look at this view, right? Like this thing held, this thing, we barely have lost the 20, right? So I think the two worst case numbers at the moment are going to be 4,700 basically flat, and then 42 basically flat, right? With that, like I said, we had this 49 number and then this 45 number. Let me draw a line. I think that's what I want to do. Let's take the monthly and let's put a horizontal on that, and let's change that color. all of these. There's this one. We don't have a dark blue. Cool. So what do you look like on the weekly? Not too shabby. I got to imagine over the next couple of weeks that 100 moving average is going to kind of keep coming up, right? Because again, this is just happening now. This is so new that it's only the 8 that's really reacting. The 100 is more than 10x slower than the 8, right? So all of this isn't going to impact itself. This 100 is still coming up from all of this stuff, right? I think this is a good guess of how low it'll go. 46.72. So let's do the same thing with the Dow Jones. Let's do the DJIA right there. Beautiful. I don't even have any lines here, I'm sure. Okay, weekly. Oh, there's barely a DJI. DJI takes me here. DIA. Let's use the DIA. There we go. That was the answer. Okay, so I'm going to use the weekly. Actually, hold on. Let me not recreate the wheel. So we basically drew a line in between the 50 and the 100 on the weekly. Okay, so that's what we're trying to do. DIA was the answer. Oh, that's this line right here. The one right between there and there. Let's take a look at 363. On the monthly, 363 is pretty much where the 20 moving average is right now on the monthly. All right, cool. And then look at that, the 341. So those are the lines for the DIA. I think, roughly speaking, 350 for the DIA. What does that translate to the Dow Jones? 35,000, right? Like that's why the ETF and the DIA are sorry, the ETF and the index, that's how they're connected, right? So if I was to take a guess, I think 35,000 is the lowest, right? Around that number is where accumulation might start to think about, right? Otherwise, we'll see how that reacts, and if it goes lower, we'll use the other moving averages below. The last one we will use is the NASDAQ. So let's come into QQQ. I think that'll be the cleanest one. So let's come to the weekly. So it's a line a little bit lower. Let's draw this blue line roughly right there. I think that's in between these two. And hey, maybe for all I know, that one was the better one, right? But we're just going to kind of keep the theme to keep going. So what do you look like on the monthly? Boom, look at that. That's where the 20 moving average is sitting, give or take right there. Lovely. And then, hey, I think those are going to be our numbers for QQQ. I think it's going to be 390 and then 360. And again, what does that mean for the NASDAQ? That's going to not mean the same thing. That's silly, but it's going to mean 13.6. What were the numbers? This is the one that's dumb and it doesn't translate well. So on the monthly, basically just over the 20 and then just more over the 50. So let's come to NASDAQ. So my numbers are, let's call it 14.5. And then I think I like this 13.6. Let's call it 13.7. So 14,400, 13,700. Those are my ups and downs for the each. I think I talked a little bit more than I needed to for those numbers out there. Like I said, my mojo, my juju just was a little on the lower side. I'm blaming the heat right now. I don't normally look at longer term things, but I think the one thing to take from this is, hey, these things I use, you don't need to be a day trader to use them, right? If you want to use this and like come look once a month, come look, right? There's so many timelines, right? You can do this thing once a year, right? We haven't even lost the 8 moving average on the yearly, right? Well, how low is this? Damn, that's real low. Hopefully we don't go low. But look, we're starting to kind of look at, and there's too many lines. I hate that, right? But I would say that one, but see, that's. I'm trying to think of too much. There's too many lines, but again, you get it, right? I'm going into a different rabbit hole. That's going to go into different ways. Hey, let me know your thoughts. Let me know your opinions, even if you disagree. Thank you so much.